When you saw an opportunity, you built a business around it. And every day since, you've kept a sharp eye on ways to evolve and keep your business thriving. It takes courage, creativity, and a clear perspective. At Bremer Bank, we understand that your business is the result of your hard work and ingenuity, and we're here to support you with solutions when you spot an opportunity to grow. Work with Bremer Bank, because understanding is everything.
Hey everyone, and welcome back to another episode of the Financially Fit Podcast. I am your host, Andre Creighton. As always, I'm very excited to be here with you all today. It has been a whirlwind in 2025, as we've talked about on many episodes, but this week specifically, wow. Uh, President Trump has said that he is setting a 10% baseline tariff on across the board, and there have actually been additional tariffs on top of that 10% for other countries such as China 34%, the European Union 20%, Vietnam 46%, and Taiwan 32%. Wow. I think this is kind of a gut wrench for a lot of us. I think a lot of us, if you're looking at your retirement or you're looking at your stock portfolio, you're probably panicking. And what I'm here to tell you is to stay the course. So, before we dive in and we talk about this more logistically, I just want to take some time to thank you all for continuing to rock with me here in 2025. If you're new to the podcast, welcome. This podcast is not something that's going to fix your financial picture in one day, but if we can be maniacal every single day towards our goals, I do believe that you will be setting yourself up for a life of uh, increasing your fitness journey to becoming financially fit. So, with that being said, so the U.S. stock market has fallen nearly 10% since Donald Trump's inauguration, which marks the worst 10-week start since George W. Bush in 2001. Wow, that's been 24 years if you think about it. So we've had, gosh, Trump, Obama, Biden, man, during from or within that time span, and to see that this is the worst it has been in 24 years, would be concerning for anyone. What I always say though is the stock market traditionally, historically, has always returned at least on average 10%. So while a lot of people are panicking because of what they believe is a global trade war that's on the brink, um, or I wouldn't even say on the brink that we currently are in. We're yet to see like what transpires from this, but I think we're going to see one or two things. Either this is going to create negotiation power for Trump, and we're going to benefit as we, as in the U.S., are going to benefit tremendously from those negotiations, and people are going to give in, which obviously will give Trump and his administration more power, or people are going to push back, and they're going to continue to add um, reciprocal tariffs on us, and this is going to drive up inflation. So, based on what I'm seeing today, economists are saying that they believe inflation has potential to increase to almost 5%, given some of these tariffs that are occurring today. The Dow just in the last day, has dropped 120 or 1,200 basis points, right? So that's a lot of um, that's a large decline from a stock market perspective. So, they're saying that the S&P 500 index has lost over 3 trillion in value over the 52 trading sessions since Trump took office. With obviously a 4% route as of yesterday. So it's a bit concerning, and I understand the panic. I understand that obviously eggs and gas and rent and all of those things aren't coming down, and to think that now your retirement or your portfolio that maybe, maybe you're a person that's retired and you're pulling money from your portfolio, to see that those things are declining, I think is worrisome. Hopefully, you have a financial advisor or you have someone that's rebalancing your portfolio, right? So if you are at that retirement age, I would assume that you have moved a lot of your money towards bonds at this point. If you haven't already, it's likely a little too late, right? And we might need to ride the wave. Now, that doesn't mean that, obviously it depends on your risk appetite. If you're willing to just take those losses, then take the losses. But I think at this point, what I would say instead of selling off is we need to hold. And not only do we need to hold, we need to buy. This is the opportunity to get in at a very reasonable price. And, what we talk about is dollar cost averaging, right? So it's a real thing. Right now is a good opportunity to evaluate your portfolio and the average costs of your investments and try to drive down that price, right? And try to get more shares in a better position so that when we do see that uptick again, which we will, no one knows when that will happen, but we will see um, the uptick and there's light at the end of the tunnel. So buy now, continue to buy as things continue to potentially decline, and then hopefully here um, in the next 6 to 12 months, we start to see some change and some of these gains come back. We start to see maybe some countries start to fold in negotiations, and it helps the stock market. But right now is not the time to panic. But I do understand the sentiment. So I'll just talk quickly about why I think this is why I think you should be buying more. So back in 2020, I believe it was like March, it was like right before St. Patty's Day, the stock market um, was starting to downtrend and starting to struggle. And part of it was because of the pandemic, right? And we saw over that month of, that time period of the pandemic where there was a lot of uncertainty. Businesses were going remote, people weren't allowed, consumers weren't allowed to go out and buy things. A lot of businesses are switching to try to figure out how they can do transactions online, from restaurants to retailers. And what we saw was this was an awesome time to buy. I actually partook. This was one of the first times where I, kind of took my chips and I said, all right, what can I afford to lose? And if this doesn't go the way that I hope it will, and I moved my chips all in, the chips that I was willing to lose. And coming out on the other side of the pandemic, as we started to see, vaccines come out, people starting to get back to work, places kind of reopening, semi-reopening with, yeah, no, obviously capacity um, restrictions and such. I started to see my portfolio uptick, and I started to seeing some really, really short-term gains. And I was able to cash out on those gains, and I was able to play with house money then. I think the same thing is going to happen here. So right now is the time to buy. If you have extra money, buy, 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 buy. Now, um, what I and when I say buy, I'm not talking instinct. I'm not talking about buy to your investments. I mean, go out and take whatever money you're willing to push in those chips and push them into whatever stocks you've been researching or kind of passively watching for over the past few months. Um, if you are at a point where you are planning to retire here in the next, 6 months to maybe 4 years, I would start to really take some time to get with your financial advisor and understand, like, what are they seeing with the market and what do they believe is going to happen, and really start to set a more, you can still have your larger plan, like, yep, I want to retire in 2 years or 3 years or 4 years or whatever it may be, but also set an alternative plan, right? If this happens with the stock, okay, then this is going to push my retirement out. Not stock. If this happens with the market, this is going to push my retirement out X years. And I would run a couple of different scenarios. This is a time where um, I like to put on my CFO hat, right? Because as a CFO, we often are running many different scenarios to just gauge our risk and to have a plan in case said risk comes to fruition, right? So right now is the same thing that you should be doing on your personal side. Let's set the scenarios. Let's get an understanding of what the risks are, and let's be prepared with a plan in place to tackle anything that comes with these tariffs that are being uh, imposed on various countries and across, exceptionally or you know universally from what I've seen um, as of yesterday. I do believe that things are going to get a little bit more expensive, not only for consumers but also for businesses. Especially with these tariffs, we do get a lot of goods internationally, and I think it's going to take some time for us to be able to manufacture a lot of these goods um, in-house or within America. So we will see some increase in price right now. What I will tell you right now is this is the time where hopefully you have emergency savings and you're able to utilize that savings. If you have assets that you can liquidate, if things get tough, I think it's a good time to evaluate what assets you can liquidate and how you put yourself in a tax advantageous position. If it's still tax time, there's couple weeks left. If you're getting a refund from your taxes, this is a great time for you to set that money aside just because of the unknown. If you are in a place where you're not dependent on your tax money and you are in a decent spot, maybe this is a good time to take that tax money and put those chips all into whatever investment you're interested in. So it's I understand that it's unsettling, and I'm here with you. I have some of those same unsettling moments, and what I have to keep telling myself is that it will be okay. The U.S. economy is very resilient. We always have been, and we survived the Great Depression. We have survived the 2008 mortgage crisis. Like we're going to be fine. This is just we survived the pandemic. Um, we're going to be fine. It's just a matter of how long is it going to take for us to get back to where we were. So, with that being said, continue your plan as continue your strategy as planned. Continue to evaluate what scenarios do I need to have in place, and what risks do I need to observe to make sure that I have a plan of attack in case said scenario occurs. If you do those things, you'll be just fine. So, with that being said, thank you so much for being here with me today. As I always say, it's not about how much money you make, the power is in how much money you keep. I am your host, Andre Creighton. Thank you so much for being here. Take care. Till next time.
You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African-American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast-quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.
What's up, everyone? It's Shaletta. I'm here getting a phone for one of my newly minted teenagers with Xfinity Mobile. They've got great options, affordable plans, and solid coverage that works for our whole family. With Xfinity Mobile, my daughter can stay connected with me wherever she goes. And did you know when you sign up, you can get an extra phone line free for a full year? Switch to Xfinity Mobile today for more savings, more smiles, and more ways to stay connected.